Here's what you need to know for this month in looking at the markets. Number one, 68% of institutional investors think markets are going to go down or stay flat the rest of this year. We're at a 30-year high of professional investors thinking that the market is going to go down. And 55.6% of individual investors currently are bearish on this market. Here's the deal. The markets, yes, we have volatility. You have a lot of questions about tariffs, U.S. government debt, imports, exports, interest rates. Yeah, there's a lot of those questions are out there. The reality is that there are a lot of positives in this market, and you've got to be in the right places in order to be able to take advantage of that. What are the places you should be? Clearly technology, but be aware. Technology and the way to invest in technology is changing. Yes, AI is revolutionizing the world and corporate America, but it may not just be chips as we go forward, software, those types of things as technology continues to evolve. Financials, we still have economic growth, though it's a little bit slower than what we would like. We still have the markets and the economy moving in the right direction. You have opportunities in industrials, well, things like what's happening with U.S. Steel and the merger there. Now, as we're looking forward, like I said, this volatility, what are going to be the things that we're going to see? Number one is what's Congress going to do about increasing the debt ceiling? What is Congress going to do about passing the big, beautiful bill? Will it be meaningful? At the end of the day, I'm not even certain that all of that matters in the intermediate term with regard to the market, because the markets just want clarity. Now, tariffs are going to continue to be headline. You're going to continue to go and read negative things about tariffs and what's going on, and that is going to affect the market. Here's what you have to be prepared for. You have to be prepared for one day a tweet or some sort of social media post comes out and says tariffs are going to the moon. And then 2 days later say, oh, we're going to delay it going to the moon and we're going to do it in 90 days. Markets will react to that. At some point, I think the markets will get tired and just kind of expect it, but that will create opportunities and volatility. That's the reason why you need to make sure your portfolio is set up the right way. You need to make sure that you have cash to meet your living expenses, make sure that you have your emergency fund, make sure that you have cash flow if you're retired to meet your living expenses. After that, you can take on a little bit of risk for, call it the next 6 to 10 years, but that long term, it's still intact. We are still in a secular bull market, but you have to be invested in the right place. If you have questions, reach out. We'd love to hear from you. I hope you have a great month.